Hello everyone and welcome back to the Intraday Expert YouTube channel. If you don't know me yet, I'm Pranav, the CEO and founder of the Intraday Expert and also a full-time trader. And we help people with more than 10 lakh rupees in capital, in trading capital, to become independent traders so that they can have a passive source of income or they can become full-time traders as well. But for people who have less than 10 lakhs capital, I try to help them through our free resources or other mediums as well. So in the previous episode, we talked about capital allocation and what are the things that you need to make sure that you have in your financial system before you get into trading. So if you have not watched that video, go ahead and check out that video so that you get understanding of how much capital you need to assign and what are the things you need to take care of before you assign any amount of capital for your trading. So in this episode, I'm going to talk about the most important equation one needs to know when trading in the stock markets, whether it is short term, long term, or the medium term, doesn't matter what type of trading you're doing. This equation is the most important equation. So whenever you're hunting for a strategy, all you have to look for is this equation and make sure this equation is positive at the end, right? So let's begin and understand what exactly is this equation and how it's going to change your entire trading journey. So when I learned about this equation, it changed radically the way I looked at trading. Earlier, I was only hunting for the right kind of entries, right kind of exits, where to put my stop loss and all of that. I was too worried about it, trying to find a single strategy with all of this perfecting this and trying to get profits in every other trade. But once I understood this equation, it makes things so much easier and simpler, and we know exactly what numbers to focus on. So let's get started, and hopefully this equation is going to help you out as well. So the equation I was talking about is called as the equation called edge, or the concept of edge. So this is the only equation you have to worry about so that you end up being profitable on the long term. You'll be able to identify between a bad strategy and a good strategy. You'll be able to identify which strategy which is profitable. Out of 5 strategies, let's say 3 strategies are profitable. Out of these 3 strategies, you'll be able to identify which one is going to give you the higher profits over the long term. So it's called as the concept of edge or the positive expectancy. And here's how the equation looks like. Edge equals winning percentage into average win. Okay. So minus of losing percentage into average loss. So let's don't get confused or anything. Let me explain it to you and you'll understand in a moment. So let's say, for example, you're going to do 10 coin tosses. In fact, this equation is also going to help you out understand how trading is not gambling. And out of 10 coin tosses, the probability of getting a heads is 50%, and the probability of getting tails is 50%. And let's say whenever I get a heads, I'm going to win. I'll consider that I win. And whenever I get tails, I'm going to consider that I'm going to lose. And whenever I win, I'm going to get 20 rupees. And whenever I'm going to lose, I'm going to lose 10 rupees. Now let's put these numbers into this. So here we know that the percentage winning amount is 50%, percentage losing is 50%, and whenever I win 20 rupees, and whenever I lose 20 rupees. Now let's put these numbers into this equation and let's understand what is going to be the final outcome. So edge equals percentage winning is 50%, that is nothing but 0.5, into average win is how much? 20. So whenever I win, I'm winning 20, minus of my losing percentage is 50%. So the losing percentage was 50%, that's 0.5, into average loss is 10, right? So what is the final? 0.5 into 2 is 10, minus of 0.5 into 10 is 5. So that is equal to positive 5, which is a positive edge, which means over the long term, over 100 coin tosses or even 1,000 coin tosses, this is going to give you a positive edge of 5 and you are going to be profitable. Now let's take the same example in terms of the stock market. Let's say you're going to do 100 trades. Okay. So out of 100 trades, now let's consider my winning percentage to be 60 and losing percentage to be remaining 40. So 100 minus 60 is 40. So losing percentage is definitely 40. And whenever I win, let's say I am making 5,000 rupees on an average, And whenever I'm losing, I am losing 6,000 rupees. Okay. See, in fact, we're losing more, right? But let's see what's going to happen once I put this back into the equation. So edge equals winning percentage, that is 0.6 into 5,000 minus of 0.4 into 0.4 into 6,000. Okay, let's quickly calculate that. So 6 5s are 30, that's going to be 300 minus 6 4s are 24, that's going to be 240. So ultimately, it's going to be plus 60. So as you can see here, even if your losing amount is higher, right? So the amount you're losing whenever you lose is higher than how much you're winning, you're still profitable. Why? Your winning percentage is higher. So whenever you're looking for a strategy, only look for these two things. Look for the winning percentage and the winning amount, losing percentage and the loss amount. And all of this is considered that assuming that you're going to keep the positions constant. Positions are quantity. Okay, so if you keep varying the quantity all the time, it becomes very difficult for you to identify the numbers in this equation. But if you keep the positions and quantity the same, then it will become very easy for you to identify if you are having a positive system or not. As a rule of thumb, I always look for 30 trades with the same quantity before I rule out or change anything to fix these numbers. So let's say I did the first 30 trades and these are the numbers that I got 60, 40 and 5,000 and 6,000. Now what I'm going to try to do is try to reduce my losses even nearer. So let's say instead of 6,000, I'm going to keep my stop losses in such a way that always I'm going to lose 5,500. Now let's see how it's going to change the numbers. Now let's say the winning percentage, now which was 60%, let's say it comes down to 55%. Because now that I've changed the stop loss, there might be a higher number of losses that I might take this time. And loss percentage will become again 45%. So whenever I'm winning, I'm still winning 6,000. Okay. And whenever I'm losing, I've reduced the stop loss this time. So I'm losing 5,500. Oh, sorry. Here this has to be 5,000. Right? So earlier here we were winning 5,000 and now I've only reduced one variable, that is this one. Instead of 6,000, I have changed it to 5,500, right? So now let's calculate what is going to be the equation of edge. Edge equals positive 0.55 into what is the amount? 5,000 minus of the losing percentage is 0.45 into 5,500. Okay, so now let's look at what's going to be the final value. It's going to be 2750 minus 0.45 into 5,500. That's 2,475. Okay, and the final value is going to be plus 275. Right? So finally, we understood that we have two edges now. Just by changing a small part, that is trying to reduce the losses, right, to from 6,000 to 5,500, we see that we have a greater positive edge for the same quantity, right? So if let's say we were trading with 100 quantities here, and we're assuming that we're going to trade with 100 quantities here as well. So when this happens, the edge we are getting as a higher positive edge, which means even though the winning percentage went down because we reduced the loss, our edge is positive, so you are profitable by a higher margin. So this is how you can optimize your trading system as well. So now that you've understood how exactly the equation of edge works and how you can use it into your system, I hope you're going to start looking at these specific numbers in your upcoming strategies or in the hunt for your new strategies. And whenever you're optimizing your strategies, make sure to change only one variable at a time. Don't try to change everything, so you won't know what is working and what is not, right? So try to increase your profits or reduce your stop losses, or maybe, you know, try to have more number of wins, higher probability. So try to look at it in this faction, and I think you'll definitely be in a better position when it comes to identifying the right strategy for yourself. So hope this video helped you, and if you like such content, please go ahead and subscribe so that you're going to get more such content in the future days. And please share it with somebody who's really struggling with their trading and they want to do something with trading, you know. And I'm going to see you again, and bye-bye.